So in this video, I'm going to be talking to you about how to raise money from investors for your project. So if you have a project in mind, if you have a business that you're working on and you need money, you want to raise money, how do you do it? I'm going to be talking about that. Now, who am I? I'm an entrepreneur, and I founded a healthcare investment company based in UAE, and I managed to get together some of the most high profile executives in the whole country, including a CEO of a $3.5 billion company, lawyers that have advised on $13 billion bank merger. These are the top lawyers in the country, essentially, and then also senior partners of KPMG and PwC, which are the number among the top 4 accounting firms in the world. So, and I've also brought together two of the big healthcare CEOs with 30 plus years of experience. So, not only do I have the experience that I had building the project, I had the opportunity to leverage their experience. So, that's where I come from. And some of these people have raised hundreds of millions of dollars. So, I've also done over a few hundred financial presentations with some of the biggest banks in the region. I also managed to secure a term sheet, which is a bank offer of $10 million to finance 70% of the 10 million. The deal was roughly about $10 million that was on the table, and the bank provided an offer to finance 70% of the transaction. Now, full disclosure, I didn't pursue and close that transaction because it had some legal issues, but to secure a term sheet from one of the biggest banks in UAE was something. So I've also done presentations in front of some royal family members in the Arab world, and I have some idea of what goes into a financial presentation. I've also met bankers that have financed several $100 million deals, and I have met all of the 26 banks that are in UAE, including Citibank, HSBC Bank, Barclays Bank, Standard Chartered. And I understand how bankers think, who are also financiers. I know this video is about investors, but just to give a little bit background, as to show you that I know what I'm talking about. So, so here are a couple of things. Why do an investor invest in a company? Why would they want to do it? Because there are two kinds of problem, and this is coming from the great Robert Kiyosaki, that people have. One is not enough money, and second is too much money. So the investor has this problem of too much money. If they have too much money sitting in a bank account, it's losing its value. And they want to allocate this capital to make more and more money. Not to mention, they may not be entrepreneurs. They may have been entrepreneurs, but maybe they're no longer entrepreneurs. Now they just invest in company. Or you could have a hybrid individual who is an entrepreneur and who also invests. But typically entrepreneurs, if you look at Elon Musk, he doesn't have a big investment portfolio. I mean, whatever money he makes, he re-injects into his own company. That's what most entrepreneurs do. But there is a point in time where these entrepreneurs can become investors. And when they become investors, they want their money to work for them, and their money is losing value. It's getting stale. It's getting literally stale. So if somebody has $100 million sitting in a bank account and they're not entrepreneurs, meaning they don't have a business anymore that they actively are building, then they're losing $3 million a year. Inflation is typically 3%. So they have a problem that they want you to solve. This is important to understand. They are not angels or father figures that are giving you a donation. These are not people who are donating money. These people have a problem. They want to stay rich, and they want to allocate capital to maximize their return, and they want to sit back. They don't want to do anything. They want you to get to work and multiply their money. So the burden is on you. Okay, so it's important to understand, because if you don't understand this, then you start begging them as if they're doing you a favor. Actually, you're doing them a favor. It depends on the opportunity. If the opportunity is bad, really they're doing you a favor. But if the opportunity is good, then you need to have a slightly different frame of mind. So that's a little mindset shift to understand why these people are investing, because they have a problem of too much money. They're losing value of their money and they want to multiply their money. So investment capital, also known as equity, technically it's known as equity, is money you have to pay back. Okay, this is not designed to pay for your personal expenses. This is not, so if you need money, that's not the time where you raise money, as counterintuitive as that sounds. You raise money because you want to capitalize on an opportunity that you see to multiply the money. And you need a lot of money to capitalize on that opportunity. But you never raise money because you have personal expense problem. It's important to understand. That's not why the investor will give you the money. The investor is going to give you the money because they want to multiply their money, and they give you the money because you have an opportunity they don't have. You have seen an opportunity, you have something in your hands that they don't. Meaning, if you're raising $1 million, that means the entrepreneur who made the $1 million, you're making a statement that you have a better idea than the guy who made the million to multiply his million. Because this guy obtained $1 million from someplace. This guy is a sophisticated guy. He's smart. He got the money from someplace. So when you ask for his money, what you are saying is, I can multiply this faster than you can. That's what you're claiming. You're not claiming, I need money, please give me money on your knees. That's not what's happening here. What's happening here is you're making a statement that I can multiply your money faster than you can. That's the statement you're making when you go to raise capital. And then the question starts, how so, Mr. Founder? I'm intrigued by your proposal, and if you can, that's great, but how is it? Tell me. Okay, so that's where your pitch starts. So here are a couple of things that investors look for. What region and industry you're getting into. Certain regions, it's unlikely an investor is going to give you money to build something in Afghanistan. Okay, just so sorry if somebody from Afghanistan watching, but it's a risky area. So, and there are certain areas which are just declining markets. For example, Greece. So certain markets don't have a good reputation. So the region is number one. Okay, now we're not even talking about the business, what your company does, nothing. Just the region. Okay, certain investors do not invest in certain regions. They haven't had good experience with it. They've heard bad news about it. They're just not going to invest in that region, no matter how good the business is. Maybe they don't like the court system there. Okay, it doesn't matter. Some people will not invest in a particular region just because they have a bias against it. So that's one of the things that you want to do, is do due diligence on your investor. They're going to do due diligence on you. You need to do due diligence on them, and you need to know what their reputation is. Because a lot of the people, I'm going to tell you a little secret, there are investment summits in Dubai that happen where a bunch of investors sit like shark tanks and entrepreneurs come and do presentations, and in the public forum they say, oh, we're going to invest $2 million, and everybody claps their hand, and some guy has this order stick, and then they smash it on the table, and everybody claps their hand. But and all the women are very happy, and they look at the investor, oh, wow, this guy has $2 million. And there are a lot of beautiful women a lot of the times in these investment summit, and everybody cheers, and then in private they just pull out. They don't invest. So you want to be careful with that. Even after signing the agreement, they're supposed to transfer the funds, they don't do it. So you want to be careful, and you want to make sure the investor is legitimate, has a good reputation. Okay, so you want to make sure you're talking to somebody serious, because a lot of the people just love to act like they're investors, and everybody likes that position, and everybody likes to pretend, yes, I have a serious intention. If I have a compelling project, come convince me and sell me. Everybody wants to take the buyer position. So you want to be careful that are they even serious? Are they even interested? Otherwise, you're barking up the wrong tree at a time where you have a project at hand. Okay, so so the region is one level of evaluation that they're going to do. Second evaluation they're going to do is industry, the size of the industry. Third, what are you doing in that industry? What is the problem that you're solving? And you need data to back everything up. Everything that you're saying needs to be backed by data. Data that you've obtained from reliable companies that tell exactly that identify the problem and identify the market opportunity. Now we are just talking the big picture level right now. What's the market? What's the opportunity? What's the industry? Some entrepreneurs and some investors are not going to invest in certain industries. Some investors just may have a bias against restaurants, or bias against certain products, or have a bias against certain industry that they don't like. So that's again coming back to the due diligence on the investor. The best industry that you can invest, that you can pitch, is the one that the investor has made money in. So once you decide what industry you're going to get into, find investors that have made money in that industry. What is the likelihood of them in reinvesting money in that industry if they have made money in that industry? So if you have an investor, if you know an investment group or an investment company or an investor that have actively invested in a company and made a huge return, that's who you go to. So again, coming back to investor due diligence. So region, industry, and the problem in that market, and then you have your company, which sells either a product or a service, or you're into acquisitions maybe. So the problem, the opportunity, and what is the size of the market. Competition. And competition, when you talk about the competition to an investor, it's not a bad thing. Competition just means that this market has been identified and people are making money. So competition just equals somebody's already making money, and we could be too. Because the market could be this big and the competitors could be a few. That's a great thing, because they're not hurting you, they're not bothering you. Market is just too big. You're not even going to intertwine with your competitors. There are some markets like that which are too big. Acquisitions is one of them. Not that many companies are acquiring companies. Yes, they are, but the market is just too big. So that's an example of a business model, an acquisition, or anything else that you may be doing. So now the investor will look at your team. So in fact, that's the first thing that they look at is your team. And then they evaluate these things. But that's something that's visible to them. Who is on your team? Why? Why do you buy Coca-Cola? Because it is an established brand. It has been making Coca-Cola for a long time. Nobody has died drinking Coca-Cola. They are less likely to fuck this beverage up. And you're going to get the same taste every single time. Why? Because of the brand and credibility. So your team has to have credibility and track record and experience. They have to have had some success. If you haven't had success, somebody on your team has to have that brand value, that reputation, that credibility on your team. And you're going to sway the investors in your favor. That this person who has had success chose this entrepreneur. And that's one of the reasons why I had the second largest telecom company CEO on my board as a chairman, is because of the brand name and credibility. If this man backed this entrepreneur, he has something in him, and I do have something in me. That's why he backed me. So, and I not only had him, but I had many other team members. So when I sit down with an investor or a business acquisition I want to do, or a banker, I have instant credibility. Capability is not even an issue here. Then they can focus more on the business model and the industry and the market. But team aspect, it's secure. But if I just went by myself, especially at the initial stages, I'm not going to have credibility. So they're going to look at your team. Okay, so now they've looked at the industry, region, business model, team. Now they're going to look at how are we going to get our money back? Please tell me. And what is the cost of it? And if the cost is low, or why haven't you put up the money? Why are you asking us for money? And if you are so successful, then why haven't you put up the money? Why are you asking us for money? So that's another aspect, is that they want to see how much you are involved in the project and how much you've invested in the project. But the main thing they're looking for, because that shows confidence. If you've put in some money, if you've already done something, then that shows confidence. So you have to declare how much money you're in for and how long you've been doing it and what have you produced. So you want, so that's one. The other is they want some indication of success. Some development has to happen. Elon Musk said the first thing you need to create is get whatever scrap money you can get from your family and friends and create a working prototype. What he means is show some indication of result, some development. Elon Musk got his first government contract when he did his first successful launch. So he didn't even do anything big that hadn't been done before by other companies in that same industry. He just did a successful launch. He hadn't even landed the rocket back on the ground. He hadn't achieved that feat yet. When he got his first contract, all he did, he had 2 or 3 failed launches, and then the third or fourth one took off, and that was a successful launch. But other companies had already achieved that, and then he won a $1 billion contract, and that's how SpaceX is still alive, and that allowed him to create all of this other amazing stuff that he's doing. But it all started with showing some indication of success. You can't expose yourself to an investor until you have some level of success, some indication, something on the table. We call this track record. So there is a past track record that your team has had, somebody on your team or several members of your team. The other thing is this company, what have they done? What have they done? Is there indication based on the market study? It is very beautiful, based on the region, everything. If the opportunity is so good, show us something. Show us something. If the opportunity is good, you have to have some result. You have to have something. And in products and services, it could be initial sales. Or you can say, oh, this product is so much in demand. The market is so big. It's amazing market. We can make hundreds of millions or billions of dollars. Then why haven't you? Why haven't you? If the market is so good, why haven't you? And if the product that you're trying to pitch from the company that you're trying, product that you're trying to pitch, if it's so good, why haven't you made the money? So the best answer is we have. We have made the money, and that's why we are saying it's a good product, and that's why we are saying the market needs it, because the market has already started to buy, and we're already making money, and now this is our plan to make more, and this is what we need the capital for. In fact, if we just wait a little bit and we can just use the profits to reinvest and grow the company, but if we get your money, we can go faster. That's the real reason. You've identified an opportunity, and opportunity equals cash flow. You've produced some cash flow. Investor, a lot of the investors, some of the investors do invest in companies that haven't produced the cash flow, but in almost all of the cases, they see some result that the entrepreneur has produced, or it's somebody like Elon Musk that has already built so many companies. He has proved them multiple times. He's most likely going to the same investor of his other companies for asking for a completely new project that has no cash flow, no development, nothing. It's just a piece of paper. But because the investor has had success in his other projects, they'll invest in this one. That's a totally different scenario. But in most cases, they would want to see some indication. Show us something. Okay. So show us a product, show us some sales, some initial sales, even though they are less, and they want to see some indication. Another thing that I see a lot of the entrepreneurs try to do is paint a rosy picture. You know, investors understand that life isn't rosy and business isn't rosy. There are harsh realities of business, and business is full of problems. And so just to deny the fact that there are problems and risk, and business is also full of risk, life has risk. So just covering the risk or covering the problem is not going to help you. But clearly identifying the problem shows that you're sophisticated enough to first know the problem yourself, and you're honest enough to share it. You might have seen Elon Musk laughing at his failed launches in public. Why does he do that? Or he would show on Joe Rogan, his Grok AI, which has a little bit glitches and a little bit problems. Why is that? Or Sam Altman, when he came up with ChatGPT, why does he talk about challenges and problems that they haven't figured out yet? So the reason they're doing that is they're communicating to the investor that we are in touch with the problem. We know the problem, we understand it, we understand the nature of the problem, and we know what is to be done. And here is the solution, and here's how much it's going to cost. But if you solve this problem, then it's going to be great. If you can't solve it, then you're going to lose the money. So they're very straightforward, they're upfront, they're honest, and they can clearly articulate the problems and challenges. So great, you have a big market, you have a product, you have some initial sales, and you have plans to expand 10 times or 100 times. Okay, great, but what are the problems and challenges? Oh, there aren't any problems and challenges. It's all great, we're just going to do it. Oh, something's fishy here. Investor immediately would get triggered and say something's fishy. So instead of that, you say, this is the problem. This is all great, but here is the problem and here is the risk. And we have X percentage of risk, and these are the areas of risk. This is a little bit gray area that we need to still figure out. And then the investor says, thank you for opening my eyes. I actually did not consider this, but I'm appreciative that you're putting it on the table. These are the risks. Let me consider. Okay, maybe I can add value here. I know somebody, etc., and you can solve that issue, and you can work as partners. So that's the framework. And a couple of stories to back this up. I had a friend who was, listed in Forbes, and he had a product idea. I met him in the QLA Hardcore seminar of Dan Pena, and he had this idea of water bottle, a disposable water bottle, meaning it was a design of water bottle, and it was made with a material after which, if you drink water, after which it'll just collapse and disintegrate. And it was environmental friendly. And the whole thing was environment. And he presented the idea in the QLA seminar, and all of the people were just on his case. They were criticizing the idea, they were shaming him for it because he didn't talk about money. And he came to Dubai for this same investment summit, and he was just running around Monaco, Dubai, and trying to raise money. So he called me, he said, Prithvi, I'm in town. And he had Senator of Netherlands on his board, and he had a bunch of powerful people, and one of his board members was actually introduced by me, and I gave him that board member. So we were friends, and he said, let's have a meeting. And I met him, the Senator of Netherlands, and then next day we met in Zuma, so in Dubai. It's a nice fancy restaurant. And then I asked him what's going on, and he said, I'm raising money, I haven't been able to raise money. Could you look at my presentations? I just want your opinion, your honest opinion. I said, fine. I looked at the presentation, and it was all about environment, how great this is going to be for the environment, and then he said, what do you think about it? And I said, look, there are two sides of your company. One is the customer, and the other one is investor. And the customers are who's going to pay for the investors. So whatever money the investors put into the company, is actually going to be paid back by the customers when they buy your product. That's when you're going to generate sales and profit. That's how you're going to pay the money back. He said, yeah, that's true. And I said, is the price of the water bottle going to increase for the customer? And he said, yes, the price of the water bottle is going to increase at the beginning. So I said, why would somebody buy this water bottle instead of buying a normal plastic water bottle if it's cheaper? And then he said, because they care about the environment. I said, yes, they care about the environment, but they care about their wallet also. And they care more about the wallet than the environment. Doesn't matter what they say in public. So this environment thing, and I knew this, had become a big public PR strategy to care about the environment. But when you get people to put their money where their mouth is, they would back off. So I understood the behavior around money. So I said the reason customers buy products is because they get high quality for cheap price, for the best price. And something went, like a light bulb in his head. And then I said, and the investor invests in a company not because he's making a donation where he doesn't expect the money back. He's expecting a return. The investors invest for a return. They're not investing. The mission is great. A lot of the people are passionate about the mission. But after the whole romantic talk is over about the mission, it comes down to what's my return? What's in it for me? At the core level, the profit motive must prevail. So I told him, how are the investors going to make their money back? And then he was like, And they said, but what about Elon Musk? He said, what about Elon Musk? I said, Elon Musk is, investors have not invested in Tesla just because it's good for the environment. It's also because it's a profitable company, and they have made, he created a presentation in a manner for the investors when he talks to the investors that they're going to make money from this. It's not just about the environment. It happens to be so that it's great for the environment, and that's a core of his mission. But it's not good for the environment and it's a bad product. No, it's a great product at the great price. It beats every single car at that price range, and it's good for the environment, and it saves the customer gas money. So it's cost effective to operate a Tesla and to own a Tesla. So the total cost of owning the Tesla is far less compared to the performance and quality. And that's the reason people love Tesla, and that's the reason he made the money, and that's the reason he's the richest man in the world. So I told him that you need to look at his presentation of this Tesla truck. He did a famous presentation of Tesla truck, and his argument was not environment based when he was presenting the truck. His arguments were financial, that this is the cost of obtaining the truck. If you use the truck, here is how much a normal truck spends in terms of fuel, and how much money an average truck owner spends, and here is where the efficiency is. If you use our truck, it's far better in performance than any other truck. It has phenomenal technology. It's safe. Safety is another thing that the truck provides, and it's cheaper. So that's the argument. Where is the environment? And by the way, if you buy this, you also contribute to the environment. Now that's a solid case, but that's not the primary motive. It's also a great car, and it's also cheaper than any car that is in that range. And over time, the cost of maintaining the car is much lower in Tesla, and it's safer. And that's the biggest takeaway, is it's safe. Even if you pay a little bit extra, even if there are better priced cars, it's safer. So that's his pitch. It's not just the environment. And then another light bulb went, and next time I met him, he had raised capital. So that's the takeaway. You have to have a well-rounded argument. It can't be just mission-driven. It can't be too optimistic. And you have to do your homework, and you have to produce some result before you expose yourself to the investor. Do your due diligence. Talk to only serious people. Time is money. You want somebody who has a serious intention to invest, you want somebody who has the capability to invest, and you want somebody who's already investing in your industry and has made the industry or wants to invest in that industry. Maybe their friends have made money in it, but do your due diligence on the investor. I'll talk to you soon.